Ladies and gentlemen, good day and welcome to the ROX High-Tech Limited H2 FY25 and FY25 results conference call hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshal Ghanshyani from Kirin Advisors. Thank you and over to you, sir.
Yes, thank you, Saja. On behalf of Kirin Advisors, I welcome you all to the conference call of ROX High-Tech Limited of H2 FY25 conference call happening on 29th May at 4:30 p.m. From the management team, we have Mr. Jim Rakesh, Managing Director, Ms. Sukanya Rakesh, Whole-Time Director, Ms. Agna Desi, Leader Intelligent Enterprises, and Ms. Mozi, Company Secretary. Now I hand over the call to Ms. Agna Desi. Over to you, ma'am.
Thank you, Harshit. Ladies and gentlemen, good afternoon and a heartfelt welcome and thank you for joining the conference call of ROX High-Tech Limited. We are delighted to have each one of you here as we explore and discuss the financial performance of H2 FY25. Before we dive into the detail of this half year, let me offer a brief overview of our company and its robust business model. ROX High-Tech Limited, headquartered in Chennai, exemplifies a customer-first approach and a steadfast commitment to excellence in IT solution. With a legacy spanning over 2 decades, the company has evolved from an IBM business partner into a leading force in IT industry. Specializing in system integration, ROX High-Tech delivers a comprehensive suite of innovative IT solutions, showcasing agility in responding to dynamic industry trends and consistently providing future-ready services to a diverse and growing clientele. On the operational side, we have made meaningful progress by deepening relationship with our existing clients and successfully onboarding new ones, reflecting our commitment to consistent and sustainable growth. In H2 FY25, the company strategically strengthened its global presence through incorporation of new subsidiaries in key international markets. ROX High-Tech LLC was established in California to capitalize on growing demand for enterprise software and IT consulting services in North America. Simultaneously, ROX High-Tech Apps was incorporated in Denmark to enhance its footprint in the European region, enabling a closer proximity to clients and greater alignment with regional IT transformation needs. To bolster offshore delivery capability and operational flexibility, the company also set up ROX High-Tech Mauritius, positioning it as a vital node in its global delivery network. Further demonstrating its leadership in enterprise transformation, ROX High-Tech secured a significant contract with Indocool Composite Private Limited to implement Grow with SAP. This engagement reflects the company's deep domain expert in business process automation and system integration across core functions such as finance, procurement, sales, and manufacturing. The SAP-led transformation project is expected to enhance operational efficiency and scalability for the client while reaffirming ROX's capability in deploying cutting-edge ERP platforms. ROX High-Tech also achieves a major commercial milestone during the year by securing 40 crore in digital transformation orders from large enterprise clients. These projects span critical areas of application modernization, network optimization, and cybersecurity, highlighting the company's growth reputation as a trusted transformation partner. Additionally, our Network Operations Center and Security Operations Center are fully operational with few clients already onboarded. On our medical automation practice, beta release is awaited due to AI alliances. ROX High-Tech become a member of Confederation of Indian Industry CII, reinforcing its commitment to industry leadership, collaboration, and digital policy advocacy in India's rapidly evolving technology ecosystem. In addition to its global expansion and major project wins, ROX High-Tech continued to make significant strides in the AI and digital transformation space. The company formed an agentic AI alliances with SS&C Blue Prism for the India and South Asia markets, furthering its position in intelligent automation. It onboarded key clients such as ICPL, Cobalco, and Shankar Sealing for comprehensive digital transformation initiatives, while also implementing agentic AI solutions for Ashok Leyland's EV division, Switch Mobility, and Royal Infra, Kolkata. These implementation underscore companies' deepening expertise in AI-driven enterprise transformation. Further strengthening its technology portfolio, ROX High-Tech secured the APEPDCL, Andhra Pradesh and Telangana project for SAP data center refresh and executed large-scale campus network and security implementation for Waters Corporation GCC. The company expanded its global partnership by collaborating with IBM in North America and Europe for Power VS solutions and enhanced its work with Google across Vertex AI, Google Workspace GWS, and Google Cloud Platform GCP for diverse agentic AI use cases. To support its growing delivery needs, ROX High-Tech also opened new 50-seater office at Tiruchirappalli SEC, reinforcing its operational footprint and regional presence. Now let me take you through the financial performance of the company during H2 FY25. From a financial perspective, ROX High-Tech reported strong results for FY25. On a consolidated basis, the company recorded total income of rupees 190.14 crore, EBITDA of rupees 31.82 crore, and a net profit of rupees 19.93 crore. These results reflect a healthy year-on-year growth trajectory supported by robust demand, improved cost efficiency, and a disciplined execution. On a standalone basis, the total income reached rupees 189.19 crore, representing a 7.19 increase over FY24. The company delivered an EBITDA of rupees 31.21 crore with a margin of 16.49% and a net profit of rupees 19.32 crore, translating to a net margin of 10.21%. The diluted EPS stood at rupees 8.46. The second half of FY25, October 24 to March 25, standalone revenue grew to rupees 104.39 crores. The company posted an EBITDA of rupees 10.73 crores with a margin of 10.28% and a net profit stood at rupees 9.11 crore, yielding a margin of 8.73%. These figures underline the company's consistent operational performance and its ability to sustain profitability amidst expansion and investment. With continued focus on global delivery, enterprise transformation, and digital innovation, ROX High-Tech enters FY26 well-positioned to build on its momentum and drive long-term value creation for stakeholders. The noteworthy performance is a reward of our hard work, our effective growth strategies, operational efficiency, and lucrative market opportunity which we capitalized during the reported period. At this point, we'd like to assure you the future is bright and our company will do every effort to optimize profit from it. With this brief update, I'd like to hand over the call to Mr. Jim Rakesh, Managing Director of ROX High-Tech Limited, for the Q&A section.
So good evening to all the shareholders. First of all, I would like to thank Adna, Daisy, for putting up across the business performance, eloquently and in detail. And thanks for Kirin Advisors for setting this up.
Now I request the operator to kindly open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Priya from Green Capital. Please go ahead.
Hello. So I have few questions
Yes.
with me. So the first question is, how does ROX differentiate its services offerings from other mid-sized IT players, especially in India?
I think this question has been addressed multiple times, but still. See, we exhibit expertise in the digital transformation stack delivery. So ROX has got an end-to-end capability to completely execute, implement, and bring a business value to a customer on the complete digital transformation stack. That means from edge computing to network security to data center, application, automation, and AI. So all the pieces of the puzzle we are able to execute and demonstrate business value of technology adoption to customers.
Also, my next question is, what internal metrics are used to track digital transformation success across clients?
The first fundamental aspect is the ROI of the customer, return on investment, and the total cost of ownership, what the customers have in their budgeted plans. And we are able to meet them, based on their goals as well.
Okay, what percent of revenue is currently from recurring versus project-based?
See, predominantly it's project-based. Recurring will be easily around 25-30%.
And so what is the employee utilization rate and how is talent retention being addressed?
See, employee retention, I think we are able to succeed. I think the work culture in Rocks is in such a way that we are equal employment opportunity providers. So that way we are able to retain talent. We are around 150 people right now, professionals. Most of them are certified in various technology, and we are going to expand another 50 in 18 months from now. And I think, of course, every human being can expand their, human potential to add more value. So we are trying to, optimize our workforce efficiently going forward by motivating them by ESOPs and various other, perks.
Good to hear, sir. All the best. That's it from my side.
Thank you.
Thank you very much. The next question is from the line of Abhishek Sharma, an individual investor. Please go ahead.
Yeah. So my question is, what is the development roadmap for the medical automation platform with commercial, and when is the commercial rollout expected?
So we were supposed to announce it in this financial year. I think we are waiting for this technology alliance because the AI market is very dynamic and we are not able to choose the right technology to bring it to market. So that is the one piece of the puzzle we are still working on. I think you will hear from us in the end of H1 results. Yeah.
Okay. And what is the strategic importance of partnership with Google in Vertex AI, GWS, and GCP?
Of course, most of the customers today are looking at a robust vendor in the cloud who can handle the entire digital transformation with the AI experience. So with Google, technology expertise, what we are building within, we are able to showcase business value in somewhere around 40 to 45 use cases. So these all will translate into customer, I would say business value in the coming quarters.
Okay. And what proportion of R&D or innovation budget is allocated towards next generation solutions like intelligent automation?
So we have internally we have created what we call lab. So that is where we are building the intelligent automation, medical automation, these kind of technologies. So that's where our new set of employees who have been onboarded in these technologies have hands-on. We have tested demo solutions. We have trial versions. So all our practice and I would say development of new use cases and all is going on in our test and development centers. What we have.
Our last question is, how is ROX integrating AI and RPA across its client offering beyond SAP implementation?
So we have won the use cases, a couple of deals. I think we are going to now broad-base that to most of our clients. Today we are able to showcase agentic AI in action. Yes, that's the reality today, and the customers are seeing business value out of it, and we are able to seamlessly execute in the customer premises now.
Okay. Oh, thank you, sir.
Thank you very much. The next question is from the line of Amit from Myth Engineers. Please go ahead.
Sir, in the last financial year, market eroded 2/3 of our market cap. Few observations, sir. 200 crore top line IT company with a very good management with 10% margin, not even getting the 6 PE, where PEs are getting 15 to 20 PE easily. Sir, most of the QIB, including the pre-IPO investor Lalit Dua, who's holding 22 lakh shares and now holding only few lakhs, deserted our company. So my first question is, sir, has management taken cognizance of this carnage? And second question is, it will be great help if promoter throw some light and enlighten us what went wrong with our company, because we lost lots of money, sir, investors.
Sir, your good name?
Amit Bhatt from MIT Engineers.
Yeah, Mr. Amit, I run the business. If you ask questions about business, customer, future of the company, performance, I'll be able to elaborate in detail. How can I answer for what is the shareholder, what is the investor's mindset is, what is the behavior of an investor? So I will not be able to comment.
Sorry to interrupt you. You are meeting analysts every 15 days, 20 days, and you are telling that you are not bothered about the wealth destruction. Companies are coming to create wealth for the investors, not destroying, and you are telling that you don't care about that. This is very irresponsible answer from the company, sir.
No.
You have to, first of all, you have to accept that, there is something wrong. Why market is not taking, sir? Market, Bhao Bhagwan hai, market knows everything. So, sir, please tell us that what feedback you are getting. Why our company, such a good company, is not getting the valuation? This is simple question I'm asking, and you are not answering.
Ms. Amit, please relax. See, the point here is, I cannot answer for somebody else's behavior, which I don't have control. What we are having control is a strategy, vision, employee performance, customer outcomes. These are all parameters where management has control. So tomorrow, let's assume you are owning some X, Y, Z worth of shares, and you tomorrow liquidate and go. How can I answer for you to somebody else? That's not possible. So let's
But sir, why our company is not getting the valuation, sir? Because there are 10 IT companies in the similar field. If 9 companies out of the 10 are getting 15 to 20 P and our company is not even getting the 6 P, then management should, introspect. There is something which you are not communicating properly with the market. Nah? This is also a part, sir. We are investing because we want our wealth, increases. But here, you are telling that you are only bothered about the 200 crore or 190 crore where you stuck up since last 2 years, and you are telling them very fancy story initially about that automation, and now we are not giving the proper answer regarding those. And you are meeting analysts, sir. Every, this NSE, notification, at least 20, 25 times you are meeting the analysts and the investors, and you are telling you are not knowing, what the behavior of the investors, sir. Sorry, I'm little bit rude, but it's basically sentiment most of the investors are having, sir.
Sir, sorry to interrupt, but can you please join the question queue again?
Okay, thank you. Thank you, madam.
The next question is from the line of Unnati from Unity Finance. Please go ahead. Unnati, please go ahead.
Yes. So I wanted to know what is the guidance for revenue and profitability in financial year 26? Am I audible?
Yes, ma'am. Can you be a little more loud?
What is the guidance for revenue and profitability in financial year 26?
So, ma'am, I think we are bullish about this year and the subsequent years. I think we should be able to grow at, around 20% kind of a number. Yeah.
Okay. And what role will medical automation and AI-driven platforms play in future growth?
Of course, that's going to be substantial. That's what I was just elaborating, saying that agentic AI has become a revenue-generating engine for us. Medical automation, we'll announce the H1 results about the technology alliance. We are just waiting for the final alliance to happen so that we want to work with a partner where scale can be possible.
And how does the company plan to evolve its partnership with Cisco, Lenovo, and Google?
Yeah, we are doing well. We want to grow one step above. That's the plan. And we want to broad base our market reach. We want to address more customers. We want to increase our, presence in the market. That's where we're going to add more sales team, geography-wise as well. So that way we will have more revenues coming as well.
Okay. And what capital expenditure like CapEx is planned for financial year 26 and 27?
So, ma'am, that's still in the discussion. I think maybe we will come out with maybe a, kind of separate announcement on the capital expenditures, stuff like that later.
Okay. And my last question is, are there any merger or acquisition opportunities under evaluation?
Yes, I think we are evaluating a couple of companies which can give us synergy in certain geographies. So that is under pursuit as well.
Oh, thank you for answering. That's all from my side. Thank you.
Welcome. Thank you.
Thank you very much. The next question is from the line of Miten Shah, an individual investor. Please go ahead.
Hello, good evening. Am I audible?
Yes, sir, you're audible.
Yeah. So I would just like to know, first question is that, what is the cash in hand as of now?
Cash in hand, so usually I think we have FDs, and all those things. So I think that numbers are reflecting in the balance sheet, I think, it's explanatory. Yeah.
Okay. Fair enough. So my second question would be like, see, our company is almost 2 decades old. So we have quite good, expertise as well as experience as far as the industry is concerned and the management is concerned. So my only question is that, if you see quite a couple of not couple, many of the peers, who have been working in this industry, say for 2 decades, those companies have been, clocking as a minimum, 1,000 crores of top line. If not, see, 1,000 or minimum 1,000 or 2,000 crores top line. If we were to see our company's performance, we have been notching just a notch below 200 crores of top line. Any specific reason? I mean, were we not? I mean, is it that we are not aggressive, in any inorganic acquisition, or what can be the response to that?
I think you're asking a question, it is very prospective by nature. I think in the future we will grow. That's what it is. That's the reason we came to the capital markets. And yeah, we are taking the, necessary measures to scale. Okay.
So, also, I can see the debt has increased with respect to last year. The debt to equity was 0.23 last year, and it has increased to 0.43 this year. Any specific reason for that?
So it is not debt per se. I think there are a couple of factoring limits and invoice factoring limits and all that we have added in the overall portfolio. That is the reason it looks like that. Maybe in detailed notes, I think you'll be able to see the difference.
Fair enough. So since I was talking about this top line, clocking, say, with respect to peers, so what is the, as of now, we clock somewhere around sub 200 crores as top line. So what is the company's vision, for this, say, next 3 years or 5 years down the line? Any ballpark figure is the company has started?
Yeah, we want to sustainably grow at 20%. That's the minimum,
Okay.
What I can, that's, I think I'll leave it to the market's behavior and, yeah.
Fair enough. And in the presentation, I see in the cash flow from operations, the presentation which has been uploaded for FY23, FY24, and FY25. But for FY25, there is one more line item called as FY25C. What is that C stand for?
See,
In the cash flow statement, basically. So that's on page number 39, cash flow statement. It shows FY25C. I mean, we have FY23, we have FY24, we have FY25, but there is something called as FY25C. So I'm not able to understand that properly. What is that FY25C?
So can we revert to you on this, after the call?
Sure.
Maybe broader perspective, I think we'll be able to answer now. Anything in specific, I think I'll just ask the team to report.
I'm sorry. That's cumulative, the consolidated.
Okay. The first column, the FY25 is the standalone, whereas the consolidated is the consolidated one.
Correct.
Yeah. So why does it show, negative basically? Is there any specific reason? Why my question is, if it's not generating positive cash flow, how would we be able to deploy cash into the company and grow it? That is what my query.
We have been acquiring assets in the form of setting up of NOC and SOC centers, and also the data centers for Google operations. Jim, if you could throw some light on the...
Yeah, see, I think we are setting up these, that's what I said, right? Knock, stock and, medical automation centers. So that's the infrastructure getting built. So that is yet to convert into, business revenue. That's getting into more into capex. So this year, I think you will be seeing that in the balance sheet.
Yeah. So probably that also would be the reason for the increase in debt to equity?
Yes.
Yeah. And one more question. I'll come back again if I get an opportunity. Thanks for replying so patiently. Now, if we were to see the key ratios, on page 40, the earnings per share, as such. If you see last 3 years, the earnings per share has been consistently declining. That means the profitability, is not increasing, which is what one of the peer investor was raising just a while earlier. So my only question in a very soft way, basically, I mean, how do we raise the curve from here rather than decreasing EPS? What is the management's, way going ahead to increase the EPS, how do we as investors get confident?
So if you look at, the reason why we are creating subsidiaries and trying to expand to multiple geographies is to add more, revenue and more profitability. So that's where the investments have gone. This time, if you look at expenditure also has gone because we have invested in these areas. So these all will flow back in the future. It will come back as positive growth and positive revenue. The idea is to reach a threshold of a number, which I think internally we have calculated, beyond which I think the services delivery team can start adding a lot of margins in their delivery, book. So then automatically the EPS and the other ratios, what the investors are looking at, will automatically get compensated.
Got it. So how soon are we expecting an uptick in this?
Maybe in a year or so. I think by 2027, I think we should be in that position. Yeah.
Perfect. So thanks a lot for giving the opportunity. I really appreciate it once again. Thanks a lot.
Sure, sir. Thanks very much, sir. Thank you.
Thank you very much. The next question is from the line of Rakshit Dhukalia from Moneywell. Please go ahead.
Hello, sir.
Yes, sir. Please.
Good evening. Hello.
Yeah. Please go ahead.
I am Rakshit Dhukalia from Ahmedabad, Gujarat. I'm continuously watching your company's profile update, your company's website, your results, etc. I'm really interested in your company. And I also draw your attention that I mailed 3 to 4 times in your compliance department, but I never get a response from there. Just a one-time response I get in that. I mailed 3 to 4 times, but there is no any response from your compliance department.
So what email ID did you send the mail to?
Firstly, I mailed in the March month. Then I got reply to visit the Chennai office. I want to visit the Ahmedabad office you mentioned in your website. But there is a...
So can you just let us know what is the email ID you are sending the mails to? Okay, let me just write it down.
moneywellpms@gmail.com.
Come again?
I'm moneywellpms@gmail.com.
Okay, which is the email ID you're writing mails to?
I think I mailed on 3 email IDs. As of now, I don't know, but the mobile is other mobile. But I also mailed on 3 mail ID, which is mentioned in your website, and the number you given on the website is completely wrong. Then I called from Tani Modi, who is your compliance officer, and I also draw her attention about this misinformation shown on your website. The number is not reachable and the mail ID is not reachable. But there is no any update. Still 2 months to go, but there is no any update on your website. The number is completely wrong. Mail ID is not replied our mail.
Okay. So let me look into it, sir. I think, there's some communication gap here. Let me understand from my PR team and let me fix this. Sure. We'll come back to you with the reply very soon.
I want to also ask about the company performance. Have you hired...
Sorry to interrupt. Can you please rejoin for a follow-up?
Okay, thank you.
Thank you very much. The next question is from the line of Aditya from Agora Advisors. Please go ahead.
Hi, Mr. Rakesh. Thanks for taking our question. I had a query about the product that you were working on in the oncology space, right? Could you share some developments about, how that has been progressing and what is the potential market size for this kind of a product in the coming years?
See, that's what I know mentioned previously also. The medical automation is what in the subject what we developed. The beta type is ready. We are waiting for actually we are working, a couple of my team is actually working, talking to a couple of the AI companies where we can partner with them and so that we can reach the scale. So because the AI market currently is in, very dynamic. Every week we are getting some new technology coming in. So we are not able to zero down and we don't want to time it also wrongly. So that is the one area where we are waiting. I think by H1 end results, we should be able to, by September, we should be able to identify which is the brand we want to associate with. Once that is associated, I think we should be able to showcase those technologies.
All right. And any comments on the potential market size of this kind of a product? Because it seems quite unique. It's difficult to find something comparable.
Yes. See, market size is, we are trying to do it through the cloudified version. So the business, projections are yet to come. So maybe by September we'll be able to give you that, projections also for that product.
And just something from my side, increased quite significantly.
So your voice is cracking. Can you please use a handset?
Hi, is this any better?
Yes, sir.
Yeah. So my second question was about the high employee costs this compared to previously, right? They're more than doubled, even though have not practiced. So
there is a disturbance on your end. You're not audible anymore.
hello.
Yes, sir. Please go ahead.
Yeah, my question was about the high employee costs in FY25 compared to FY24. They have more than doubled, even though.
So we have deployed, capacities for future growth. That's what I also mentioned in the previous question by some other investor. So see, once you have building capacities in multiple places for future revenues, I think we should also deploy manpower and various quality professionals in the business. So we have added headcounts. We have also added some senior level people who are started working on various territories. So you will see that reflecting the the plowback reflecting in the future performance of the companies.
Understood. That's all from my side. Thank you.
Yeah.
Thank you very much. The next question is from the line of Mahesh Sheth, an individual investor. Please go ahead.
Yeah, hello.
Yes, sir, please go ahead.
Yeah. So my first question is that, what is the long-term strategic objective behind your expansion into Singapore, Denmark, USA, and Mauritius? And how does the company plans to scale operations in its newly formed international subsidiaries?
Yeah, the idea is to onboard global clients so that we can start servicing and delivering from here. Because we can very effectively, we have already demonstrated that we can effectively execute digital transformations, right? So we are trying to deploy some sales and pre-sales teams in these territories. Once the teams are up and running, we'll start going and start engaging with our customers. And we'll start onboarding clients, and that's where we will start generating more revenue.
Okay. What is the vision for Rox's AI, RPA, and cloud transformation verticals in the next 3 to 5 years?
See, the future is, going in that direction. Most of the customers are embracing AI as a technology. I think we are seeing a lot of revenue potential in those areas, and we have already have wins here, and we have demonstrated customer outcomes. So we will broad base that implementation.
Oh, okay, got it. And how does the SAP and IBM partnership enhances the ROC's competitive edge?
Of course, with the technology partnership is very key. That's where we are able to, give sustainable and long-term solutions to customer outcomes. So that will continue, and we want to grow in those areas as well.
Okay, got it. That's it from my side. Thank you.
Thank you.
Thank you very much. The next question is from the line of Anil Kumar, an individual investor. Please go ahead.
Good afternoon, sir. So my question is regarding in H1 of this year, you are having EBITDA margin of around 25%, and in the second half it is 10.3%. Overall, it is 16% is okay, but in the second half, margin has come down drastically. This is my first question.
So because we have started, the reason is because we have started investing for our future growth. That's the reason we have spent that money. So that's what it is. So you will see that reflecting in the subsequent years.
What is any guidance for the future? Because 10% margin and this is 25% margin in the one half, drastic downward trend is there. Is it going to continue downward trend, or we can hope?
No, you will see recovery coming in this subsequent years.
Any rough idea on the EBITDA margin? What you are expecting EBITDA margin for this year and the coming years? Any rough idea? Exactly, broad-based range as the company.
No, the plan is to go back to our original position. That's what. So that's the reason. But at the end of the day.
And what is that?
So what we did in the last years.
Okay. And my second question is regarding this investment. You have invested in fixed assets. In the consolidated balance sheet, it is 58 crores have been invested in fixed assets. Can you give some light on what is this component? This comprises of?
These are all our, that's what it's a North SOC and the investments gone for medical automation and those kind of infrastructure what we have put.
This is in fixed assets. These are equipment. In fixed assets it is there. In medical.
They are all data centers. Without the data center, how can you build technology?
Okay. That is in data center. Your personal data. And so there is a difference in the standalone and consolidated. In the standalone, this is 23, and the consolidated is 58. So it means you are 25 crores you have invested outside India in the subsidiaries.
I think I'm not sure.
How much you have invested in the subsidiaries? Your recent subsidiaries you have maintained.
So we will come back to you on that particular detail to you. Yeah.
And it is on very higher side. But can you throw some light on this?
No, that's what I'm saying, right? We will come back to you on that particular detail to you. Yeah, to understand exactly what is your question, and we'll take it on
receivables debtors, it is on very high side. Simple question is this. So it is on 5 months basis you are giving credit for 5 months. Is it so, or it will come down?
How do you come out with this numbers? How do you say it's 5 months? It's 120 days or 124 days.
Sir,
90 days is the cycle.
It is 74 crores. The figure is there, and your sale is 190 crores. 190 crores. It comes to 5 months. Around 5 months, more than 4.5 months.
Can I answer this? This is the consolidated and the standalone. The difference is majorly because of the businesses that has happened in the subsidiaries.
Okay, madam, but 5 months debtors is on very high side. My question is whether these are receivables, whether there is any bad debt so nahi hai koi.
I'm sorry. Could you rephrase your question? If we are asking me how does the hike happen, that the hike has happened between the subsidiaries that has been started and the business that has been brought inside within the subsidiary.
And
If that is your
do you
question,
have
that
any
answers it.
any plan to reduce it, madam?
Yes.
Any plans?
To reduce it. Debtors, receivables, yeah, debtors is on higher side. Whether you are thinking on this to...
Are you questioning about the debtors and the...
Yes, debtors.
Creditors?
Debtors, madam, debtors. Receivables, yeah, debtors. Hello?
Maureen, could you...
That's what I think. I think we will work towards reducing this in subsequent years.
Yeah. Okay, that is a very simple answer. Okay, thank you. Sir, any guidance you are on this 26 or 27 revenue front and EBITDA front?
I think we should be able to grow at 20%. That's what it is.
And EBITDA, you have given that 20% growth is you have given, but any okay, that you have saying that in the last year. Okay, thank you. Thanks, sir. Best wishes from my side.
Okay.
Thank you very much. The next question is from the line of Rakshit Dholakia from Moneywell. Please go ahead.
Hello?
Yes.
Yes, sir. Please.
Yeah, sir. I want to ask that your employee costing is almost 100% growing this year, last financial year. So have you hired double employment force for the business purpose?
Yes, I think I've already answered in the previous question. We have hired people for our future growth, so that's where I think the cost of employment has gone up.
And have you any planning for fundraising in near future?
We'll come back to you. We'll come back to you on those requirements. I think our market maker and those kind of teams will start engaging before we have to announce.
And why is the inventory is year by year increasing, trade receivable increasing, working days also increasing?
We'll work towards reducing in the future. Yeah.
Okay. And one most important question: the one public investor who already held around 10%. I think you also connect with them or not, I don't know. But why any dispute between the individual investor and company? They completely exit, almost 80% exit in open market.
No, I think I don't want to comment on those things, but I don't have control and we don't have any dispute with anybody.
Okay. Thank you, sir.
Welcome.
Thank you very much. The next question is from the line of Aditi Roy from Patel Advisors. Please go ahead. Aditi Roy, please go ahead.
Hello, am I audible?
Yes, ma'am, you're audible.
Thank you. What are the primary risks associated with the ROC's current expansion strategy? Hello?
Yes?
Sir, my question is, what are the primary risks associated with the ROC's current expansion strategy?
Primary risk?
Yeah, primary risk.
Risk is act of God. What else?
That is associated with your expansion strategy.
Of course, tomorrow we get into war with somebody, I think we will not be able to expand now.
Okay, sure. So I have another question. How is the company mitigating geopolitical or regulatory risk in new international markets?
See, these are all out of our control. Let me be very frank. No company can mitigate geopolitical, risks. That's all by the governments to handle. Company is doing commerce. So as long as there's a congenial environment and we are still not getting into any, conflict with, I think digital transformation, IT solutions are required for anybody today in the world to be competitive. So that's what it is.
Okay, sir. Thank you, sir. That's it from my side.
Welcome. Thank you.
Thank you very much. As there are no further questions from the participants, I now hand the conference over to Mr. Harshal Dhanshani for closing comments.
Thank you everyone for joining the conference call of Rocks High-Tech Limited. If you have any queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference call.
So thank you very much.
Thank you very much. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.